Hi again, everybody. We're here again with Mark Collinsworth of Ver Global Financial to talk about where the economy is heading, a favorite topic of late. And Mark, you say that considering the trends, Social Security, Medicare, and interest on debt within 10 years will comprise 110% of tax revenues in the United States. And that, you say, is unsustainable, correct?
That is correct. As the population ages and people live longer and they have to make, COLA adjustments, right now about the government brings in about $3.5 trillion a year in tax revenue, and they have to borrow an extra $1 trillion to make ends meet. So their budget is $4.5 trillion per year. At the current rate they're going, of that budget, 65% of their budget goes to those three line items. And those line items are growing as people tap into more Social Security, as we issue more and more debt. The government right now is trying to issue about $5 trillion for all the programs they have in place from COVID and the infrastructure bill. If that stays on pace, in 10 years from now, the U.S. debt will reach $1 trillion, and the interest on that debt will be $100 trillion, and the interest on that debt will be $1 trillion a year. So the government, to make ends meet based on those three social programs and their normal spending, like salaries for FBI, Department of Justice, is going to be close to $8 trillion a year.
Unsustainable. So what happens then within 10 years? What happens?
I think where the problem comes in, if we have another major recession, which we eventually will, as we always do, similar to 2008, because of all that massive debt load we have, like in 2008, the government spent all this money to bail out all these banks. I think in the next big recession, when the government tries to bail us out, they won't have the liquidity or the market to go to and actually borrow that money. Even right now, as we speak, with all this infrastructure talk on raising the debt ceiling, there's already bond rating companies saying, hey, if you raise the debt ceiling, we're going to have to put U.S. debt on a credit watch to actually be downgraded. And if you're also curious, I checked the CDS rates, credit default swap rates. What those are insurance policies for if a bond goes bankrupt. What's the probability based on how they're buying that those will go bankrupt? 3 weeks ago, the probability of U.S. debt going into default was only about a 3% chance. Based on where the credit default swaps are trading at right now, there's now a 22% chance that the United States will default on its debt.
So therefore, again, the question is, within 10 years, within a single decade, this is unsustainable. So what happens then?
I think you will have a recession that will make 2008 look like a walk through the park. The government will be unable to really raise money as easily as it did for 2008, unable to raise money as it did for COVID-19. It's basically used up all of its credit quality in the marketplace. And one thing I like to, when we start talking like, trillions of dollars, people really don't comprehend what a trillion is. So I always like to ask people, what was happening 1 trillion seconds ago?
Yeah, what's that? Tell me.
1 trillion seconds ago, cavemen were drawing paintings on walls in Europe. That's roughly 30,000 years ago, equates to 1 trillion seconds. And currently, we have $28 trillion in debt. And in the next 10 years, that $28 trillion is going to be $100 trillion. And the interest on that debt will be $1 trillion just in interest.
So that brings us back in time to what era? What eon of time is that?
What do you mean?
I mean, all those seconds add up to how many thousands of years before?
The 1 trillion seconds equates to about 30,000 years ago.
Right. So, but we're talking about how many trillions?
We're talking about in 10 years, the U.S. debt will be at 100 trillion, which basically will put you back. Basically, if you go back to the number of years, that actually predates when man actually walked on the planet.
And we may not walk that, end our walk right there.
Correct.
So, Mark, you see behind me, we've got the Wall Street panic of 29. So we're talking about 29 style panic, even worse than that.
Well, this is kind of really weird if you start taking all these different things and start looking at them. One of the things William Gann was really big in studying market cycles, and he said markets basically repeat themselves every 100 years. And I think it's very interesting that right now, people have called this the roaring 20s because of the way the stock market's going and everything. Well, you go back 100 years, that was the 1920s. I think it's all, and that wouldn't surprise William Gann one bit because he came up with this 100-year theory. And even such, William Gann actually started his working on this 100-year cycle thing back in 1907 and 1908, which was the big market crash. People actually called the 1907 and 1908 market crash. They actually called that a depression before the Great Depression because that was the worst market and the worst economy before the 1930s. And if you add 100 years to 1907 and 1908, what year do you end up getting?
Wow, where we are now. So again, by the way, who is William Gann for those who are not familiar?
William Gann was actually a market timer. He actually did a lot of studies on market cycles, on how people basically have different. People are pre-programmed to act a certain way, and every generation acts the same way. Give you an example: when you were a teenager, you probably acted a certain way. You wanted to go out and party, spend money on liquor, partying, fast cars, all that kind of stuff. And you're
Not me.
And your parents probably complained about that and said, you don't need to be doing that. Well, your parents did that same stuff when they were teenagers, and their parents did the same thing when they were teenagers. So it's just that same cycle repeating itself. Like you tell your kids that when your kids were teenagers, you told them you shouldn't be doing all that stuff because you now have learned from experience. And according to Gann's theories, we are destined to repeat those same mistakes over and over again because we're pre-programmed to do those things.
And that cycle is upon us now.
Correct. We're basically getting ready to enter that cycle where we make that same generational mistake where we spend too much money, we raise taxes and so forth, and cause another economic calamity.
So what happens to the value of stocks we're holding now, 10 years from now? What happens to their value?
Well, it's actually funny that you actually mentioned this. There's actually a chart that I've got somewhere around here that actually shows when asset values of family households get over 60%, the 10-year return. So like right now today, the net asset values of how much stocks people own in their households is roughly 67% today. So that basically of your net worth today, the average person, 67% of the people, or 67% of the average person's assets are in the stock market, and the other roughly 40% is in cars, their house, and so forth. Historically, over the last 7 years, whenever that number has gotten above 60, the 10-year return going forward from that point has been a negative return going forward. Now, that's not a bad thing to say. If you look back at 1998, when we actually got to 62%, the 62% threshold was saying from 1998 to 2008, the return on the stock market would be a negative 2%. Guess what? We actually ended up at a negative 4% return from 1998 to 2008. But from 1998 to 2000, stock market actually went up another 40%.
So therefore, again, for the layman, where does this leave us? I'm holding $100,000 of stock now as my retirement, whatever. 10 years from now, what's it going to be worth?
Well, right now, this is what I think. I think you need to be very aggressive on stocks, just like, when Gann came with his theory, the 100-year cycle, this is the equivalent. If you ask William Gann today, this is the equivalent of 1921. Look at what happened in the stock market from 1921 to 1930. It took off like a rocket. And I'm telling people to get very aggressive with stocks, load up on stocks right now, because basically when we hit, 2030, 100 years from 1930, we could be facing some very, very bad economic times. And as we get closer to the end of this decade, probably let's say 2028, I think you should start getting very defensive, start pulling out of the stock market very aggressively, start putting your money in things like gold, hard assets, not Bitcoin, not a hard asset, silver, make sure your house is paid off, and make sure you have a nice cash reserve, maybe even stock up on food supplies just in case.
Wow. I mean, this is cataclysmic, is it not? I mean, is this the end of America 10 years from now? America as we know it, with our relatively prosperity that we're still enjoying to some extent?
I would say prosperity will probably take a steep drop down. And I think the United States will survive it. But I think just like you saw in the 1930s, it was a very large struggle. Unemployment skyrocketed, home prices dropped, stocks dropped. So yes, we'll survive it. But for the people that are not prepared for it, it's going to be a very, very difficult decade for them.
In 29, we still have the pictures of people selling apples in the street, people jumping from windows. You're talking about that kind of a scenario 10 years from now.
Yes, because I think the main catalyst is you'll have that recession, and the U.S. government, which is already at that point, will already be borrowing like $8 trillion just to keep their operations going. They will have to tap in and borrow an additional, maybe like with COVID, another $5 or $6 or $7 trillion on top of the $8 trillion they're already having to borrow. And at some point, people are just going to say, why do I want to borrow your debt? If the U.S. government right now, if you applied a FICO score to the U.S. government based on their income to debt to interest ratio, they'd have a FICO score of like, 50. They wouldn't be able to get a loan from a bank if you took the same FICO scores that they look at to give us a mortgage or a car loan. The United States Bank would not qualify for any of those.
Now, when you say, despite how drastic a drop this will be, the U.S. will survive it, how?
Well, based on history, this is kind of like what I've learned. The easiest way for the United States to actually get itself out of deep problems like this is actually to go to war.
Yeah. When you lose all else, they take you to war, is what another economist, Gerald Salenti, often says. So you see this in our future, drastic drop off in the economy, the stock market, the debt unmanageable. And the way they're going to get us out of it is to get us into another huge conflict somewhere.
Correct. Wars are actually very profitable for the U.S. economy. Look at what happened during the Great Depression. If it hadn't been for World War II, the United States may have not pulled itself out of the recession for another 10, 15, or 20 years.
Yeah. Well, Mark, you're an economist, you're a financial advisor, and your calls on stocks, where they're going and all that, have been very accurate, very good over the years. So as a financial advisor, I'm astounded to hear this diagnosis from you, this prognosis of where it's going. So you would be advising your clients to stock up on stocks now while the market is roaring, but to get out of it before it all comes tumbling down like it did in 1929.
Correct. And what's weird about this is there's different things. There's a thing called what's called the Elliott wave theory, which basically takes Fibonacci numbers. So Fibonacci numbers are numbers that continuously repeat themselves in nature. So like the how fast a bumblebee flaps its wings is going to be a Fibonacci number. The number of times your heart beats per minute is going to be a Fibonacci number. There's thousands of Fibonacci numbers, so it can be any one of those, but everything in nature follows a Fibonacci sequence. Well, the Elliott wave process basically takes these Fibonacci numbers and it actually breaks them out into market moves. So each market move represents a Fibonacci number. And once you go through so many Fibonacci numbers, the system resets itself. Now, these Fibonacci numbers stretch over decades and decades and decades. What I find very interesting is I'm looking at all this stuff from a fundamental standpoint, and the people that follow Elliott wave say that we are now coming up on the last set of Fibonacci numbers, which means you have to go back and you have to reset the Fibonacci count back to zero. Last time the Fibonacci count reset back to zero was 1930.
Yeah.
So that's a whole brand new system of resetting on something that's totally different, becomes the same conclusion.
Well, Mark, what's going to keep the stock prices accelerating before the big crash a decade from now? What's going to keep them propped up? And what makes you so sure that that'll keep rising until we have the precipitous drop?
Two things. One, it's human nature for people to get very greedy. Just like in the early 1920s, people got very greedy. They were buying stocks that really had no purpose whatsoever to go up. And I think you're going to continue to see people getting very greedy, wanting to own stocks that really are just absolutely worthless. That's point one. The second thing is the Federal Reserve keeps pumping billions and billions of dollars in the stock market and keeps interest rates low. One of the reasons why they're keeping interest rates low is, right now interest rates are averaging, like on the 10-year Treasury bond is yielding about 1.5%. So if they're borrowing all this money, and put this in your own perspective, if you were to basically borrow $1 trillion and you had the ability to set the interest rate on that, do you want that $1 trillion, Larry, to be at 1% that you have to pay, or do you want it at 2 or 3%?
Yeah, right. 2 or 3.
So,
Sure. Yeah.
the government has an invested interest in keeping interest rates low. And if interest rates are low, that makes people want to flock to stocks, because right now, if you buy a 10-year Treasury bond, it's below the inflation rate. You're guaranteed to lose money on a U.S. Treasury bond. If inflation is running at 3% and the interest rate's 1.5, you're guaranteed to lose money. So your alternative is, I can take a guaranteed loss on my investment in bonds, or I can go here to an alternative and buy a stock that might have like a 3 or 4% dividend yield on it. I get that dividend yield, which is better than the bond yield. And if the stock goes up 10 or 15%, that's just icing on the cake for me.
Yeah. Now, let me ask you this. It's occurring to me with all this drastic, what's ahead of us, will Social Security survive for at least for the next decade?
That's a really good question, because technically Social Security was actually bankrupt decades ago, and it just hasn't realized it yet. And what I mean by that is, when Social Security first came about, there was back in the 1940s, there were 7 people contributing to Social Security for every 1 person pulling out. Today, there's 5 people pulling out for every 1 person contributing to it.
Yeah.
So I don't see how that system can keep going, because the only reason Social Security even is going today as it is because the United States government borrows money to basically pay the Social Security payments that they owe people.
And that, again, is not sustainable indefinitely. So therefore, are we talking about a default of Social Security within a decade?
See, that's a very interesting question, because the way that the government set up with the Constitution, welfare payments and interest payments get paid first before anything else does. So if you work for, let's say, the FBI, Department of Justice, before you get your salary, the interest on U.S. debt, Medicare, and Social Security has to be paid before you get paid. So I guess where I'm going at with that is, does the government just start firing people left and right to make those shortfalls? Or do we end up being like a Zimbabwe? Do we have to go out and issue $1 trillion of debt to make those Social Security payments? But instead of issuing that $1 trillion of debt at 1%, do we have to do like in Zimbabwe and issue it at 20%? Because if you start issuing debt now at 20% and you have $100 trillion in debt, you're now talking about an economy that's not going to have 6 or 7% inflation rates. You're talking about an economy that's going to have 15 and 20% inflation rates.
Unbelievable. Now, how about Medicare? What's going to happen to Medicare?
The same situation as Social Security, and that's also an interesting thing. When you have inflation that high, what happens to the people when you have people that used to be getting these payments through Medicare and Social Security, and they can't get those payments anymore? What does that do to the mindset of those people that are struggling? Do you have a revolution or rebellion? Do you really have a real overthrow or coup of the government? Back in the 1950s, the CIA actually had a rule of thumb on how to tell what economies would actually have a coup or a revolution in it. And the rule was, or the gauge was, what's the inflation? Take the inflation rate and the illiteracy rate of the country and add those together. And if those two numbers are above 50%, you have a very, very high probability of a revolution occurring to overthrow that government.
And how does that apply to the U.S.?
Well, fewer and fewer people are going to school. I'm sure you've seen the stuff where people are graduating from college per se, and really don't even know basic economics. They don't know basic history. They're just getting through and basically getting a piece of paper, and it's actually absolutely worthless. So in my mind, those people really are illiterate to a degree. They might be able to read and write barely, but they're really not educated. And then you take that group, and then you take inflation. You start losing your Social Security payments, your Medicare payments. You start seeing interest rates on car loans hitting double digits, inflation going through the roof. Those people that are now uneducated or supposedly educated, what do they do in that situation? Because if you go get, because I know a lot of people that have college degrees, but you talk to them and you're like, and I've met these people and I'm like, did you even go to college? Because they're so stupid, but they have a college degree. And I don't want to hire those people because they're just, let's be honest, they're just stupid. If those people can get jobs because they're stupid, they're in my mind, they're really just illiterate. They might as well have just not even gone, wasted their time going to college for 4 years. Shoot, I know some people that went to college for 6 years, still got a 4-year degree, and are still just dumb as a brick. What do those people do when they can't go to the grocery store and buy food? They can't get a job. They can't get a car loan. If they do get a car loan, they're paying 20% interest rates on it. What do those people that are basically so uneducated do? Do you basically do what Thomas Jefferson said? The Second Amendment is actually the fourth branch of the government for when the other three branches fail you.
Well, again, Mark, considering all these trends now, all these developments, how again will the U.S. survive this calamity at the end of this decade, of a decade from now?
I think, just looking at kind of the metrics, if we got in that situation and I was basically trying to fix it, I would probably say you'd have to make some very, very hard decisions. And I'd say you'd have to look at the Social Security system and just do away with it, just shut it down. You'd have to take Medicare and basically just make dramatic cuts to it. All the welfare programs that the U.S. does, you would have to basically just cut those down to zero. And that comes down, and even though those are the right moves to make, will the politicians make those? Because the second you start making those kind of cuts, you now have just increased the probability that you might actually get a real world coup or revolution on your hands.
Yeah, I mean, so for senior citizens depending now on Social Security, or those who are going to be dependent on it within 10 years, what's your advice to them?
Buy stocks, try to get, there's people that were basically dirt poor at the beginning of the 1920s that invested money in the stocks and became multi-millionaires from investing in stocks because everything was going up in the 1920s like a rocket, kind of like what it is today. And a lot of those people basically were able to walk away filthy rich and just got lucky as they was able to walk away at the right time. Other people not so lucky, but
in other words, they got out of the market at the right time before the crash.
Correct. Some people that just had basic common sense is that I think, we'll use the story of Joseph Kennedy, JFK's father. He realized that the stock market had a huge problem when his shoe shine boy had better stock picks than he did.
Yeah. So what is that? What's the lesson there?
The lesson there is when you get into stock market bubbles and you look at fundamentals go out the window. And you kind of saw this back with the .com bubble. There were companies that should have been bankrupt that were going up 100, 200% per year for no reason whatsoever. But guess what? When the .com bubble popped, those same companies that had gone up, let's say, 700% over the last 4 years, they actually went bankrupt because they were worthless 4 years ago. And the stock market finally realized they was worthless when the .com bubble popped.
Yeah. So you're actually talking now about a scenario within a decade of the government drastically reducing or even eliminating altogether Social Security and Medicare.
Correct.
And if you do that, that increases the likelihood of what?
Well, I was going to say that just thinking out loud, there's another scenario though they could actually approach, and this is kind of like what Nazi Germany did in the 1930s when it was kind of faced with the same problem. You basically just find a weaker class of people that's wealthy, and you just go and take away from them and then redistribute it to the people that don't have stuff. As you know, Hitler raided the museums, the artwork. He stole, gold bullion. The Jewish people who were actually fairly wealthy took money from them and then just redistributed it or kept it for themselves. You could also even see that scenario with the United States government. Find some, small third world country that has a lot of resources to it, invade it, take it over, and then start selling those resources on the open market at a discounted price.
So we're talking really about social upheaval here of a severe degree.
Correct. Or even, another scenario that now that I'm thinking about it, Russia was kind of faced with this, the old Russia was kind of faced with the same problem, at World War I with the rise of Lenin and all that stuff. Just turn the country into a pure socialist country and then basically have everybody in the country work for the government. Now your prosperity and your level of standard of living drop off dramatically. But hey, no job versus a job that barely pays you something. I guess the barely paying job is better than the no job whatsoever under, communism, but that's another scenario.
Well, a number of political critics now, especially those among the Republican Party, are claiming currently that we are headed towards socialism. Do you see it actually developing that way?
I think in the process of what they call socialism, they always seem to always want to talk about socialism more like what they have in Venezuela and stuff like that. I don't think we'll ever get to that level of socialism. I think the socialism that we're currently on track for is more of the socialist economies that are in Europe, where the government basically has a single payer system to pay for, healthcare. So, in that case, Obamacare would go away and the United States would be the only issuer of insurance for healthcare.
Yeah. So
that's more of a socialist degree.
So in other words, if we adapt the European style, such as in England and other nations, people have their basic needs fulfilled, but nobody is that prosperous, correct?
Correct. That is absolutely correct.
And you think that's a pattern that we're establishing right now?
It seems like it's the kind of the track that they want to push people on. I'm sure you see politicians all the time talking about, wanting to do this and that and want all these people from these foreign countries to come in, like the Haitians and stuff like that. These people are fleeing these countries because they're already dealing with socialism. They're coming here. So why do we want to be more like those countries? I just don't understand that. But we're getting to just critical overload. You just can't let all these people come in and then put them on a welfare system that's already extremely overextended already.
Well, there's some of the same critics say that the reason why they're allowing this mass migration to the southern border unchecked, encouraged, no vaccinations required, et cetera, is that they want to bring in cheap labor and they want to create a new demographic base for the Democratic Party. Do you see it that way?
Well, I most definitely see it that way because, we'll use Venezuela, for example, here, which is, a pretty socialist style country. Yes, the people there are basically starving and don't have any jobs. But you know what? The politicians that are in power live very, very, very well. If you're a socialist, and I'll throw Bernie Sanders out there, you may not be able to create a billion-dollar company like a Jeff Bezos or somebody, but you become a politician, you can actually live a lifestyle that actually will make a Jeff Bezos lifestyle pale in comparison, because Jeff Bezos cannot print unlimited amounts of money. Jeff Bezos cannot go out and take something away from somebody that he wants. But a politician in a socialist style government, a dictatorship, they see something they want, they can just take it.
Well, let me ask you this. Considering where we're headed with the U.S. economy, things are going down, a big crash ahead, does China come out on top? Do they become the new world power economically and militarily?
Well, technically, China's already a world power. It's already beaten the United States on multiple facets. And what's kind of funny about it is China has looked at where the United States has come from and where it's gone and where it's made its mistakes in that process. And China's on the exact same path, but they've already learned from the United States mistakes not to make those same mistakes. I'll give you an example. One of the reasons why the United States made one of its really big mistakes is they actually created basically a healthcare system like, Medicare. And that's a huge drain on society because our tax dollars has to pay into a system that's very inefficient and so forth. The Chinese don't have that kind of system in place. They know that long term, that's actually very devastating to their economy. We have a minimum price wage. You go and work someplace, you're guaranteed to get a minimum wage on that. And people get that minimum wage, they demand more and more because they think they're worth more and more as they get more stuck up. So the Chinese, I'm sure you've heard the Chinese sweat labor shops. They don't believe in a minimum wage. They've already learned that watching the United States, that's not the way to go. It's just going to end up being a drag on your economy long term if you go that direction.
So therefore, the way it's developing, the US goes down within 10 years and China rises, becomes dominant, even more dominant than it is now, both economically and militarily.
Correct. And that's one of my even longer term concerns, which I think I'll probably be, I'll be well dead before this actually happens. This is something that'll probably happen in the next, 70 to 100 years. The United States is like on the global scale, it's a very prized asset to hold. The United States is the only country in the world that has every natural resource in it. No other country can say that they have every natural resource. And some of those natural resources are in abundance in the United States. If you look at a country like China that's growing, the United States, 100, 150 years down the road, if we actually go into some kind of collapse, we will actually be a prime target for some global power to come in here and actually take over, kind of like a Red Dawn scenario.
Mark Collinsworth, I think I'm going to end it here because I'm getting more and more frightened by this scenario. Drastic stuff ahead, according to Mark Collinsworth of Vera Global Financial, who knows a heck of a lot about the financial world and the way all these mechanisms work. And Mark, considering what we laid out here this evening, we'll be back with you again before too long to see if the trends that you've laid out continue in the same pattern. Mark Collinsworth of Vera Global Financial, thanks for being with us.
Thank you.